Hello, everybody. Thank you for joining us for this latest Imrg weekly retail data show. So what we do on here every week is we look at what's going on in the e-commerce market. We track online sales for a few hundred retailers. We track just online, so there's no high street sales in here, but there are high street retailers. So we get their online sales, and we also have online only ones. So everything you see is online only data. And the purpose of this show that we do is just to show you what's going on really, so we can measure how the market's performing, and we can filter it in different ways to show you different categories and split the retailers into different groupings and things, so you can understand where the sort of growth is and where it's more often not at the moment. And we also get guest speakers on to give perspectives as to what's going on as well. So just sort of take you through what to expect on here this week. So the first thing that we're going to do is just show you the latest week of data that we got. So was the growth up or down, and how to looking for a bunch of categories and things. And towards the end of that, I'll start to get into traffic, which is sort of the theme, if you like, of the stuff that we're looking at today. And then the next thing we're going to do is I'm going to speak to Laura from Ascendex, and we're going to be talking about the various channels that you might be able to use, and the traffic that sort of comes through them, but particularly with a focus on the messaging communication that you can do. So hopefully there'll be some useful insight in there for you. And then we're going to look at traffic proper after that. So we're going to get into it. And what we'll be looking at, first of all, is just splitting it in different ways to see where the traffic is doing a little bit better than maybe it is for some of the other groups. So that's sort of split into two parts. That's the first bit. And then we're going to talk to GFS about cart abandonment. So they've been out and done some research, and we'll be sharing some of that. So Bobby's here with us. And then we're going to talk about optimization with Cloudinary, looking at if you're getting this traffic to your site, bearing in mind it's a bit under pressure at the minute. What can you do to really optimize and get a better share of it is kind of the stuff we're trying to get across to you. So hopefully with all that, there's going to be something that you can pick up and take onto your business. And I'll just finish up with with looking at various categories and how the traffic is performing across those categories. So first thing is to look at how the market's doing. So our index runs from a Sunday through to a Saturday. So the latest week of data that we have is week commencing the 17th of March. And what happened? It's one of those weeks really where it's difficult to say, like, is it any good or is it not? I don't know. Just on the face of things, it was the strongest growth we've seen this year. By strongest, I mean it was just about flat. It was slightly negative, but below 1 percentage point. And that's the best it's been so far this year. And if you look at the sort of view you got there, it goes back 14 months. It's not very often above the 0% baseline. It's been a very difficult time in e-commerce at the moment. So that's actually pretty good. Where I've put the red box is it's over the last 2 weeks this year, and then the same 2 weeks from last year. So you can see what we're sort of growing against. And it's Mother's Day moving basically is why you see such a big wobble. So you see it was a very big decline from last year, and we got a really big decline in the week before this one. And then it's kind of really rebounded quite strongly. And the reason that it's done that is because Mother's Day just moved forward in the calendar. So the lines have just gone a little bit funny because it's not a proper like for like in terms of a big retail event featuring in the same week. So that's kind of what happened, but it is a good rebound, and I'll kind of show you why that is in just a second. But here's the categories that we had for that week. So this shows you the growth for each of those categories. Some of them are top line categories, some of them are subcategories of others. So, for example, women's wear is a subcategory of clothing, and so on and so forth. And I think quite a few of them you can sort of trace to probably the kind of thing that Mother's Day might have kind of boosted. So kicking on a little bit. So fragrance, for example, did really well in the lead up to Mother's Day. And I mean, like really well, 50, 60% up. And it's just kind of carried on even after Mother's Day. So fragrance is really, I think it's the best category so far this year, actually. So that's doing quite well. Home and garden, a few of its subcategories like furniture, homewares and decorations, pretty good growth. Sports and outdoors as well. So actually, there's a real sort of selection of stuff there that's doing well. Right, it isn't just one category or the other. Gifts, I'm afraid, is right down the other end. Just keep your eye on electrical as well, just like fifth along from the left hand side or so. So not really doing that fantastic electrical at the minute, but more on that in a second. But why this is kind of good is if we look at week on week, you can see that actually it was actually a pretty good week, I think. We don't get to say that very often recently. Now, this is showing week on week growth, and it's showing it for 2 years. So your sort of gold line is 2023, what happened last year, and then 2024 is this year. So that's your purple line. And what they're showing is so far this year, what is the week on week growth? So for each of these weeks, did the amount of money spent online go up or down compared to the previous week? And what you see there really is quite expected. So after Christmas, there is kind of a falling away of spend, and it gradually sort of makes its way back up again into positive territory, which happens around the back end of February. So the purple line actually looks pretty good. Now the problem is why we started off so weak is because the week before, the week at the end of last year, so the one following Christmas, was just a huge decline, massive decline compared to what we normally see. So it just really fell off a cliff in that week. So therefore, the lines pushing their way back up again. They're just coming from a lower base, and that's why January was such a bad month. But since then, actually that purple line looks pretty good to me. It's kind of behaving itself reasonably well. The lines sort of jump over each other a little bit. That's what they're supposed to do. And the thing to look for really is if when you get a few weeks where one line is ahead of the other. So that means it's either doing better than it was last year or it's doing a bit worse. And the purple line in that respect actually is quite healthy. And then if you look on the right-hand side, you can see where Mother's Day kind of moved forward a bit. So the week commencing the 25th, I think that's probably where quite a lot of the sales sort of fell. And there was a decent spike ahead of where it was last year, right? It's not huge, but it was a bit of a spike. There's a falling away for a couple of weeks, but then there's a big gap there. So our first big gap really of the year was in that week commencing the 17th. So therefore, that's telling you that it probably was a good week, I think. I'll say it's difficult to say sometimes, but it feels like it was probably all right. And what's kind of what's pushing that up? Well, clothing had a good week, to be honest, which has got me scratching my head slightly because I look out the window. Indeed, went outside earlier, and it is just horrible outside. I mean, the rain was right in your face. It's really windy and everything. It's not really screaming at you. Come and buy our nice spring ranges with our light jackets and nice light shirts and things like that. It's not really screaming that. But clothing had a really good week. However, look at the red box again, and you can see there is a little bit of sort of adjustment going on there. But if you're trying to be positive about clothing, you look at the same period last year, and actually the weeks coming up were pretty negative, right? So there should be maybe a bit of positive growth coming for clothing. Electricals is the second one we're looking at here, and like I said, electricals it's not really doing that well. So if you look at 2023, which is like the first sort of 3/4 of this graph, you can see that it's got quite a lot of positive growth. Yeah, negative as well, but some decent positive growth in there as well. And that's not to be sniffed at really in the market that we're dealing in. But look at January 2024 and onwards, and it's just been negative for the whole time. It hasn't had any positive growth so far this year. Now, it is against some big growth from last year for this week, but nonetheless, it hasn't had any positive yet so far. So it's not doing that great, electricals. But health and beauty definitely is, and you can see the sort of Mother's Day adjustment thing here. So it's just a really big change to what the trend line is. So it's positive all the way from the middle of last year. No negative growth in that period at all, and then it's got quite a big decline, and that's just because of Mother's Day moving. So that just feels like a blip. Basically, I don't think that's much more going on there. Home and garden is our other one. Now, this is one where it really has had a terrible start to the year. So just a massive decline of somewhere near 25% down for that final week in December, and then it's just hard to come back from that. So that's why the line is pushing its way up gradually, but it has got some positive growth. But look on the left hand side, what it's comparing against. What it's going to be comparing against over the next few weeks is positive growth. So it might be slightly difficult. The other thing about home and garden is that Easter always moves around in the calendar a bit as well. So we are into the Easter weekend here, and it looks like it might be slightly tough going, but it's a difficult kind of thing to do until you get a few weeks past Easter. You just don't really know what's happened until you can really smooth out the lines. So we shall see with home and garden. Another good place to be, by the way. Health and beauty is a fantastic place to be selling at the moment online. Also, sports and outdoors. Look at that. Really good growth for that. We only broke this category out year on year, at least at the start of this year. And actually, this week, we have for the first time introduced baby and toddler and children's wear into clothing. So we now have that in our categorization. If you sell in those categories and you are not in that index, then you should get in touch and you can start to get your stuff in there. At the moment, it's just week on week and month on month we report. And then once we've got a year, we can start to show the year on year data. So children are now in the index, in children index friendly. How about that? Right. So traffic then. Let's just have a quick peek at this before we get into it in detail. So this is showing you year on year traffic for the week just gone. So if you remember what happened with the overall index, it was about sort of split down the middle, where there was about half of them were positive, about half of them were negative. That's not a bad place to be at the moment, to be honest. Clothing for traffic, excuse me, the picture is not quite as good. So garden and sport and outdoors have got really strong traffic growth, and why anyone's gardening, quite frankly, at the moment is beyond me. But there you go. But then there's quite a few of them that have got negative growth. And poor old gifts has got quite a big decline there. And I'll show you the categories in detail a little bit later, how the growth has gone for it. It's quite an interesting picture, actually. And this is just showing you over a slightly longer period. So this is just showing you from across 2023 or 12 months, view. And this is what it's done. So in that time, when you split it out by month, there actually wasn't any positive growth for a whole month for 2023. And January, look at that big decline that we saw start January this year, and then February, like a little bit better, but it's not quite into positive territory. So traffic is under pressure, just like revenue is, and I'm going to get into the detail of that shortly. So we've got a few things to tell you about actually in this as well. So we do these virtual things, obviously, nice and easy. You can just be in your chair or whatever and watch and let me do the work. Or you can also come to physical stuff that we do. And one of these things we do is a boat cruise. I kid you not. That boat that you see there that is going down the Thames, that's the very boat indeed. And what we do is we go down the Thames on this, see the nice sights and everything. And while we do it, we just have a good old chat about cross-border trade. So what we talk about there, we get everyone sat together in groups and we show some stuff about what retailers' propositions are for cross-border trade, delivery propositions, how long it takes, how much you charge, and all that sort of thing. We're doing a survey of retailers to get an understanding of what their challenges are, where they're focusing, what markets are interesting for them, etc. And we're going to show all that on there. So if you've got problems with cross-border trade, or even if you're not doing it, you'd like to, then this is a place to come to, really, and have a bit of a chat about it. And aside from anything else, it's just good fun floating down the Thames on a boat, isn't it? So yes, hope you can join us for that. You do need to be a retailer, by the way, if you wanted to register for that. Now, I'm going to talk to Laura at Ascendex now, and we're just going to talk about an event that we did last week and some of the sort of learnings from it. So do you want to introduce Ascendex first, Laura?
Yeah, sure. Thanks, Andy. So I'm Laura. I head up the marketing team at Ascendex. Ascendex has been around for about 20 years, and we currently have 46,000 customers and counting globally, and we help them with business messaging, predominantly SMS, but most recently we are onboarding lots of customers to help them with WhatsApp and LCS as kind of some of those newer mobile technologies.
Okay, so what we did last week before, something like that, is we got some retailers to go for a breakfast, and we talked about the different channels through which the traffic can arrive, and how they're sort of looking at optimizing those channels. And you were there, Laura, and you went around and spoke to some people. So what was the sort of thing that came out of it for you? What was on their minds?
Yeah, I think lots of good chat. It's always good to go to those breakfasts and see what's on everybody's minds. Still lots of talk about first party data and GA4, and I think lots of retailers are at different stages with that journey. So that was really interesting. A lot of chat around personalization. So when you have that first party data, how do you actually use it? And I think that's something that people are still wrestling with to various degrees. So it's good to hear from the people who've really kind of got it right and are doing that successfully, and other people that are still kind of working towards that. And a lot of chat about kind of emerging technologies. And I think, as we've seen, it's quite a difficult time in e-commerce. So people are looking for that kind of more creative side. And so there's lots of chat about WhatsApp and OCS, but also lots of chat about TikTok Shop, which was particularly interesting to somebody who tries to stay away from TikTok as much as possible.
Yes, yes, good idea. But we need to use it for business, unfortunately. So
Yeah.
there is a lot of interest actually among retailers in TikTok shops. I think a lot of them are interested rather than saying, "Hey, we're really smashing it." Uh,
Mm.
so what would you sort of say that they could do for things like, to get the most out of things like TikTok Shop and WhatsApp and other
Yeah.
things?
Yeah, I think lots of good chats about it, and a couple of the retailers there were just kind of embarking on that TikTok shop journey. Obviously at Sendex, we help onboard a lot of teams to use WhatsApp, so a little bit of experience. And I think what I would say to anyone kind of toying with the ideas is to really look at them as channels in their own right. And so one of the things that we see with WhatsApp is that the kind of temptation is to pick up your email strategy and dump it into WhatsApp. And of course, that doesn't work. And really similar with TikTok Shop, you probably want to be looking at a different inventory than you would sell in your normal shop. So it's kind of really about spending the time tailoring the messaging and the content and the offer towards those new channels, and really kind of looking at how you can make the most of them in their own right. So, not picking up your email strategy the same way that you wouldn't, have the same strategy for PPC and SEO. You want to really kind of spend the time to investigate how to use them properly.
Okay, when you say like different, you might sort of show different products in there than you might do in other channels. Could you give an example of what you mean?
Yeah, I mean, I don't have a ton of experience in TikTok Shop, but a lot of the chat was around, kind of TikTok is very much those kind of new projects. You want something that's going to be viral, you want something that's going to be really accessible, and so it might be that you kind of push some more of your FMCG inventory rather than kind of big ticket items, because it's actually a way of getting people to engage with the brand rather than, looking at kind of basket value. So I think it's, to kind of start small and start with a limited inventory is probably easier than opening up, your whole store to that channel.
Okay, got it. All right, great. And then so your thing is also sending messages to people.
Yeah.
What are the sort of considerations when you're sending messages to people? Because obviously with these kind of areas like SMS, WhatsApp and stuff, you got your friends on there and stuff, isn't it? And then businesses communicating with you through that is not without its risks.
Yeah, yeah, we appreciate that definitely. I think it's twofold, isn't it? First of all, we all are on WhatsApp with our friends and family, so it's kind of where we hang out, it's where we're comfortable. And we really do kind of love our mobile phones, and that's why this messaging, when you get it right, works for businesses. A couple of things really we recommend is not to be afraid to ask for permission to ask for that option. And a couple of good places to do that, when people are already engaging with your brand, give them that option to sign up for WhatsApp messages, but to sign up for SMS. Ideally, you do that at checkout, or you do it through an offer or an event. But one of the retailers that I particularly love is a retailer called Beauty Pie. So they're very much in the health and beauty sector. I have a membership with them. And they sent me an email a couple of weeks ago just saying, do you want to sign up for our SMS alerts? And I did, because why not? And they sent me a message once or twice a week, with kind of new product launches and offers, and it works for me, and it's a brand that I love, so I'm really happy to give them my mobile number and really happy to hear from them. And we similarly we did some research last year, so we went out and surveyed 5,000 adults in the UK, and actually 81% of them said that they would consider buying something from SMS or WhatsApp. So it is something that we're actively looking to do, because we spend so much time on our mobile phones that we don't necessarily have, the separation anymore that maybe we would have 5, 10 years ago.
Hmm. So just like in the real world, you would only give your phone number to someone if you want them to ring you. That same thing
Yeah,
applies.
yeah, I think
Okay, cool.
that's a really good way of putting it. Yeah.
And what sort of impact do you think WhatsApp is kind of having in our industry?
Yeah, I think there's a couple of things really. I think WhatsApp gives you two abilities. It gives you the chance to push multimedia and do that with immediacy. So All the good content that we're creating, images, videos, long form content, we're able to share that with email, but with WhatsApp, you can share that really quickly. And, the kind of open rate for WhatsApp is 99%, whereas for email, it's around about 20%. So you're actually getting people to look at your content really quickly. It's really hard to ignore it when your mobile phone goes off. So I think that's a really big thing for us to kind of take into account. And then I think the other thing that it does is it allows you to interact with speed. And we've recently just published a case study with Renus. They're a home delivery company, so they specialize in a lot of the kind of big ticket electrical, sporting goods, furniture. And they've actually just put WhatsApp in for their customer service because they realized that people were waiting anywhere between kind of 25 and 45 minutes to get in touch with customer services. And what they were able to do with WhatsApp is put WhatsApp in and actually have chatbots deal with a lot of the queries. So now something like 68%, I think it is, of all queries that come into them, rather than waiting on the phone, they get an instant reply from the WhatsApp chatbot. And it means that the people who don't get the answer that they want from the chatbot can go through to customer services. So customer services are able to kind of deal with that more complex problem, where you do need some human intervention. And for them, it's been absolutely game changing because they're just able to provide, really good customer experience.
Yeah, I still think I like humans, Great, Laura. Thanks very much for sharing those thoughts with us.
Thank you.
Right, I mentioned that we run quite a lot of stuff, physical stuff as well as virtual. So another thing that we do, we've got you covered. I'm telling you, we do all sorts of things on different topics. So this one is a virtual roundtable. So it's on Zoom, just like you are now, but instead of a webinar, it's a meeting where you can see you. We can see you, and you can talk to us and stuff. And we do these where we just get a group of retailers together and have a bit of a chat. And this one is about payment methods and the behaviour across them. So think of buy now, pay later solutions and things. What sort of uptake does it get? How does it impact the other metrics that people use? Do they return more and all that kind of thing? And we just have a bit of a chat with that and get people to share how they're using it, what they're seeing, and things like that. So if that's of interest to you, that is on the 16th of April. It's 11 to 12 o'clock. So I say it's a virtual sort of roundtable. And things in the chat if you wanted to register for that. Do need to be a retailer. Now, traffic. Then let's get into this proper. So what I'm going to show you here is sort of dividing up the traffic data into slightly different ways, so you can see sort of where the growth is and where it's kind of a bit more fraught. So first of all, we'll just take you back to the chart that we showed. Right, if you remember, we had this line which is showing you over the last 12 months what's the traffic doing. This is split out by month, and we haven't had in that period any positive growth for traffic for a whole month. So not a fantastic picture like that. But if we break it into categories, then it is a little bit more mixed than that. So what we've got here is a total market and then 5 of the sort of big top line categories that we track. And what was the traffic growth for each of those categories? And this is what it looks like. So as you can see, there are actually some wild variations for some of these categories. So overall, for 2023, traffic was down 4%. And that's reasonably in line with the revenue. Actually, the revenue is down about 3.3%. So quite tightly aligned. I've got some little graphs to show you revenue and traffic later, don't worry. And then if you look at the category side, there is a bit of difference, right? So health and beauty is a category that's been doing really well revenue-wise. Actually, the traffic was only up 2%. I think the growth was more like 9 or 10% in revenue. So health and beauty is not only doing well, it's actually doing really well with the amount of traffic that it's getting. Clothing, meanwhile, has had a bad 2023, but it actually had some positive growth from traffic. But the problem is the conversion is just down quite strongly. So it's just the sums don't add up for it to get any revenue growth. But the positive for clothing is there is still increases in traffic going to clothing retailers. However, there was a report out today that said by next year, 10% of clothing sales will be second hand. Think about the growth of things like Vinted, etc. So watch out really on that one. That does feel like it's becoming a big deal. Electrical also sort of bucked the trend. So the traffic was down, but actually revenue was sort of flat, slightly positive even for 2023. So it did really well there, but it's had a really poor start to the year. revenue-wise and traffic-wise, indeed, as you'll see. And then gifts is not really a surprise. Gifts is in a right old state, and then home and garden's about flat, right? So there is some real variation between how these retailers are doing traffic-wise. Now, another way that we can break it up is to say all the retailers in our index, if we break them into three different categories, which is budget, mid-market, and premium. So the type of brand that they are, sort of demographic that they serve, etc. We have a little mechanism for working out where they go. How did they do across the last 12 months? And then this is quite an interesting little view. This is probably not what you think, actually. So the yellow one there is budget. So you might think that budget, given the economic difficulties that we have and everything, budget might be the one that's sort of doing well, but actually it's the worst of the three. Now, why is that? It could be that it isn't necessarily the case that everyone's just jumped straight away to the cheapest possible thing that they can buy. That's not really, in general merchandise, that's not really what people are kind of reporting. You know, people are still buying sort of reasonable quality. They just don't, not doing it maybe as frequently is kind of the problem. And then premium's actually the one that's done the best out of the three. So that does kind of defy logic slightly, but when you think about it like that, perhaps it's not quite as surprising. This one is fascinating, though. This is multi-channel and online only retailers, and the gap is just profoundly visible. So the purple one is multi-channel retailers, so the 0% baseline. It's kind of on or around about that for quite a lot of it. And then the green one is online only, which is down 10 to 15% for pretty much most of that time. So multi-channel retailers by far doing better in terms of getting traffic to their website than the online only ones are, by far. Now, why is that? I kind of think it's probably related to the fact that during the pandemic, the multi-channel retailers were the ones that got all the growth, basically. It wasn't really the online only ones. And then they've swollen their databases. And I think that probably having a bigger database is just sort of telling a little bit there. I think there must be something like that going on to account for that huge gap in those two there. Now, where does it come from though, this traffic? And we do track this. We used to track it in a really nice way, but GA4 came along and has sort of confused it a little bit. So basically now when we show this, some retailers give us this stuff through non-GA4 analytics packages, and some give us it through GA4. And the difference is the classifications are a bit different. So we have to show it in a different way. So this here is going to show you the non-GA4 benchmarks for this, and it's showing you across a period of seven quarters. A really eagle-eyed of you might see that there actually isn't a Q1 2023. Reason for that, because GA4 came in and it basically caused people a bit of a headache, and they couldn't give us the data, so we sort of missed the quarter there. But then we got going again, so don't worry. And what you see here is of all the traffic that goes to the websites on a last click attribution model, non-GA4 last click attribution model, what is that split? So what you have there is affiliates, direct, display, email, organic, other, paid, and social. And the big one is paid, I'm afraid. That's the one that accounts for the biggest share of traffic across that whole period. Organic is the second biggest one. Email, which is the purple one, is pretty consistently sort of 10, 11%. For most of that time. And direct is, you'd like direct to be higher, wouldn't you? Wouldn't it be great if everyone just went to our websites without us having to pay for it or do any work to get them there? But that's how it looks from sort of non-GA4 perspective. And then the GA4 one is a bit more complex. The reason that it's more complex because it's got more options basically. So we'll just show you one sort of burger here because this is it only came in Q3 2023. And there's different ones here, right? So for example, there's now something called cross network, which is the orange one there, which is actually reasonably high. There's also, it's been broken into organic search and organic shopping. And the ones that are reasonably big there is paid search is kind of the big one there. So paid was the big one there, and it's paid search here. Paid social is not quite as big. That's the sort of brown one that's reasonably squashed at the top there, or nor paid shopping. So paid search absolutely is from a GA4 perspective, that's where it tells you that's where that stuff kind of comes from. So you see, when you calculate in a different way, and I'm sure that there's all sorts of clever algorithms doing this, and maybe some reasons why it's calculated in a different way, it does look different, basically. And then we can compare the two, right? So we can compare here, this is back to the last click thing, and we can compare revenue and traffic. And what would make most sense is if they were both completely identical, and some of them are. right? So for example, this is telling you that, look at the red one, which is organic. So um, the organic channel, so someone going through probably a search, something like Google, and then going onto your website, but not clicking on a paid ad, so just organic search. That's 20% of the revenue, and it's also 20% of the traffic. So it's completely in line with it. The big yellow one is paid, so it actually accounts for a bigger share of traffic than it does revenue. So that's a negative thing there. So it doesn't all kind of add up, and sometimes it's a little bit worse for some of those channels than others. That's the way it is, I'm afraid. And then this is just bringing you into conversion, because we're going to start talking about this now with some of our other guests. Conversion is the thing that's down, right? So if the mathematics here basically are how much traffic is coming to your site and how much of that is converting, and that is effectively what gives you the money. And traffic being down and also conversion being down is kind of problematic. So this is looking over quite a long period, goes back to January 2021, and what's happened since then. Look how high it was. So that's coming off the back of December and Black Friday. That's why it's up around about 5%. But look at what happens after that. Look at the next Black Friday period, so the next sort of kink in it, and it's just a little bit lower, and it's a little bit lower the following year, and then it's kind of stabilized, but at a lower point. So the conversion is just a bit more fraught now, I'm afraid. So one more event to tell you about. This is a lunch in a nice restaurant. This is at Balthazar on Covent Garden Piazza. And what we're doing is we're going to review Easter. So I mentioned Easter earlier, and the line's going to move around. We have to let it all settle in before we decide, was Easter actually any good? And this is the one where we're going to talk about it. So if you wanted to come and sit with some other home and garden retailers, you do need to be a home and garden retailer, obviously. And you wanted to just talk about how things went and whether it was any good and all that sort of stuff, then you can register for that one as well. It's a nice lunch and stuff as well, you know. Right. So Bobby is from GFS, and we were just talking about conversion now. Bobby's done a bit of research, and I think this is the second bit of research. It's like a 2-year trend that you've got so far, Bobby, is it?
That's right, yeah.
So you can talk us through some of this research that you've done.
Sure, yeah. Can you actually see me? I just want to double check.
Oh yeah.
Oh, fantastic. Okay, great. Hi, everyone. My name is Bobby. I'm from GFS. GFS, what do we do? We are multi-carrier. We provide multi-carrier delivery and multi-carrier technology. So we work with the likes of LK Bennett, Hotel Chocolat, whole range of retailers. And we handle about 35 million parcels a year. If you don't know about us, then our job is simply to make multi-carrier delivery as easy as possible for retailers to offer the widest choice of delivery options to their customers with the highest quality of service and reliability. So, as Andy said, last year we ran quite a big survey across over 2,000 UK consumers, and also we went out to about 200 retailers to really understand what's behind basket abandonment, which really ties in with what Andy's been talking about earlier. How do you solve the problem of conversion? You get people to your website, but if you're losing them through cart abandonment, then what's behind that? If you come on to the next slide, the reason why we did this last year was because some of you may remember back in 2018, Barclays did a similar sort of report where they calculated the cost of cart abandonment as £18 billion to UK retailers. So last year we thought, has anything changed? You know, let's go and repeat this this research to find out, have retailers learned any lesson? Has this improved? And also to understand from consumers themselves what's behind it. So as we see now, here's some of the key highlights. What's astounding is that when we ask those consumers about what were the main reasons for cart abandonment at the checkout. So this is once people come to your website. So they found you, they're on your website, but they don't complete the purchase. Over a quarter of them said they abandoned it due to delivery friction at the checkout. And this has been consistent in 2023. And what we're seeing here is actually some of the early data that we've got on the 2024 results. And what we're seeing is that this is still consistent. So 1 in 4 sales are lost at the checkout due to delivery friction. And when we now look at some of on the next slide, where, if we drill down to understand, well, where are sales being lost at the checkout, what we see is that it's pretty much consistent across all categories. So whether it's clothing and footwear, health and beauty, is pretty much consistent. But when we look at age groups, some are more likely to abandon purchases. So Gen Z are more likely to abandon purchases at the checkout. And 32% of the most affluent shoppers are likely to abandon 1 in 3 buys when it comes specifically to furniture. If we drill down a bit more onto the next slide, trying to understand which aspects of delivery is it that cause a shopper to abandon their purchase at the checkout. The first thing that stands out based on the research is lack of delivery choice. So the breadth of delivery options falls short of consumer expectations. So when asked how many options would they expect to be offered at the checkout, the majority said they'd expect about 5. When we then asked the same question to the retailers, what we discovered is that there's quite a big gap between what shoppers expect and the reality of what they actually get. So when we look at the data for online only retailers, they offer just under around 3 delivery options. And for retailers that also have physical stores, they offer at least 1 more, typically click and collect, because they've got a shop, so it makes sense. So the key takeaway on breadth of options is that consumers expect about 5, at best they're getting 3. But it's not just about the breadth of choice, it's also the mix of choice. So when asked which are the most important delivery options that they want to have at the checkout, you can see on the left how they would rank them. So it's interesting to see that the premium services, the ones that tend to give them more control, more visibility of where their parcels are the most the popular ones. However, when we then compare that with what's being offered by retailers, again, we see quite a gap and a disconnect between the two, with less than half of retailers, 39%, offering premium services like nominated day, and a mere 25% offering parcel shops. So if we now come on to the next slide, if we then drill down even further and look at, break it down across various reasons, delivery related reasons for abandoning carts, and also what that comes to in terms of potential cost when you calculate average basket values across different categories to derive potential value. The number one, in terms of the number one point of friction that causes the highest number of cart abandonment and consequently the biggest loss of sales and revenue, is limited choice of delivery options. But then over to the right of that, you can see how cost is a factor, speed is a factor, concern over returns, which unsurprisingly, returns also factors into somebody's purchase decision, because when they come to your website, they're not only looking at what delivery options are there before they even make a purchase, but they're also checking what are the returns policies of that retailer to understand what risk is there in buying this. If I buy from here, what risk is there? How difficult is it for me to get my money back if I need to return it? But when you add all those different reasons together, the new cost so comes out at 31.5 billion pounds. Okay, so when we started out with the first research we did last year, the benchmark figure was 18.5 that Barclays came up with. And what this shows us is that the problem is still there. If anything, it's got bigger. And the cost to businesses, especially in the current context, is something which can't be ignored. Okay, so if we move on to the next slide. Sorry, if I thought there was another slide actually, Andy, but there isn't. So so
I am your final slide, Bobby.
thank you, Andy, your lovely face. Yeah, so it's really quite interesting. Actually, it ties in a lot with what you've seen around traffic and conversion, because the key thing is removing friction. When they do come to your site, it really is about focusing on getting those conversion rates up.
And the one that you showed them, people are saying that they want them to offer, next day and nominated day and all that sort of thing. And obviously, it'd be great if you just offered everything, right? But what is it that sort of stops them from offering loads?
I think there's two things. One is a myth that the retailers think that consumers don't want to pay, which is absolute nonsense, I think, because in the research supports that. In the I think in the latest research, 96% of millennials, so this is, the sort of younger age groups, said they would pay for delivery, for a premium delivery option. So one is they think, well, there's no point in offering it because we'd have to offer it for free, and that means taking it out of our margin. But actually, they want to pay for it. So that's a myth. But the key reason is really their sense of internal constraints, because they are looking at it, they're looking at multi-carrier from a traditional approach. They think if I need to add another service or another carrier, that means another contract to have to set up, another supplier, another IT integration, and the overhead of all that and the complexity is just not scalable. Okay, which is why we're seeing such a shift from working with multiple carriers to working with a single multi-carrier partner.
And this is like the second year that you've done this one, right? So you're publishing it in May, I think, aren't you? So what do you sort of think of the big differences?
I think firstly, a couple of things that have stayed the same, and what we're seeing consistently is that one, delivery choice absolutely trumps cost again. Okay, so consumers are willing to pay for that convenience. The second is that retailers are, cart abandonment is due to delivery options, limited delivery options at the checkout is still a big factor. What we're seeing differently this year is that consumers are spending more time in the pre-purchase consideration phase, which you'd expect. So they're spending more time shopping around to get that best price before they decide which website to go to. And they are absolutely less tolerant of any kind of friction they come across on their website. When we drill down into reasons, what's important to them around delivery, choice obviously is still the number one. But what we've seen come up in the rankings is delivery reliability, which is interesting, and wanting better notifications, more transparency of where their parcels are.
Okay. Yep. Fair enough. All right. Well, thanks, Bobby. I'm sure we'll get that out once we've got that research published. Right. So we've talked about that stuff. Now, Susanna is from Cloudinary. She's going to take us through some examples of how people have sort of optimized SEO, because when traffic is under pressure, obviously you've got to make the most of it where you can. So Susanna, introduce yourself.
Hello, so my name is Susanna and I work in Cloudinary as solutions engineer. I would like to introduce Cloudinary here because I think we are here for the first time. So Cloudinary is the image and video platform for the web, and we take care of your media from sourcing it, managing it, all the way up to the delivery on the website. So we have not only powerful APIs as part of the programmable media, but we also have very modern digital asset management. So that's just a short introduction about the Cloudinary. And when I get to the next slide, what I would like to discuss here is that when you how all the media which you are preparing, you want to target media to email campaigns, you want to have media on your homepage, on any part of the page where it's coming, it's part of the social advertisement. So everything what is driving traffic on your website has media in it. So that's somewhere where Cloudinary can definitely help you, because like we can not only help you create and transform at scale this media, but also optimize it and personalize it for the omnichannel experiences, while being connected to all the other systems that are in your ecosystem, like CMS, e-commerce platforms, and many other systems that have to use this media. So basically, Cloudinary can act as a single source of truth for all the media inside of your organization. And I would like to mention one of our customers here. So those of you maybe who are excited about cycling definitely know who Rafa is. For those of you who are not cycling enthusiasts, Rafa is a brand which will dress you up in cycling clothes, even if you are just commuting to work on a bicycle, or if you are a professional cyclist as well. So they decided to move away from the monolith to something, to Mac architecture. And they were also looking for a way how to boost their performance on the website, because when the traffic already gets to the website, you don't want them to drop because the website is loading too slow. You would like to have engaging video on the page and it's not loading fast enough. So all of these are reasons why people would leave the website immediately if it's loading too long. And Cloudinary helped Rafa to deliver amazing visual experiences, images, or videos, and it also improved 20 to 80% their SEO presence. So if you look at the next slide, I prepared a couple of more detailed traffic metrics. So from the core web vitals of Rafa, when they decided to move to Cloudinary and to have all the media assets optimized on the website, visually complete metric improved by 50%, which is like a very good result. Hero rendering times are reduced by 70%, and largest contentful pane, which is that largest image or largest video on the website, has improved by 60% on average. And on average, the page load time were running 40% faster than they were before. So all the people who probably abandoned Rafa website before when it was loading slow, or the images and videos didn't look that great, so in the end, they didn't shop. After doing this change and delivering amazing visual experiences on the website, Rafa was able to improve all of these metrics using Cloudinary. And what I would like to highlight here, based on the data we have seen from Andy, it's very difficult to get the traffic. So when you already have the traffic on the website, it's always important to think about how to keep them engaged, how to use media for that, and a lot of media for all the retailers is already created. So then just using it in omnichannel is something what Cloudinary can easily help with. Another topic which I would like to cover here as well is just a quick example of how you can target traffic from different locations. So many retailers are trading internationally. So you don't need only English keywords, you also need keywords for different languages. But we often forget that also media, which is being delivered on the website, has something what is like a SEO-friendly URL. So that's the URL which will tell all the SEO engines what is on that image, what is on that video, and you can change it, you can modify it if you have ability to do so. So this is an example of the URL from the Nike website, which is being served in Japan. And what it does is that anyone who is searching for example, running shoe or any kind of shoe on Japanese Google, they will be able to see Nike images in the image search on Google, because it's properly indexed for the localized market, and they won't have, search engines won't have any problem to get to those and understand what is on that asset. And of course, SEO search engines always prioritize something what is in local language. So this is also a way how to maybe boost your presence in the local markets, which don't have to always speak English language. So yeah, I just wanted to give you a couple of ideas about what to look at when it comes to the media and media presence online. And I think that's it from my side.
Excellent. Thanks very much, Susanna. Right, I'm just going to conclude our traffic bit here. So I showed you some bits earlier on about the sources of the traffic and things like that. This time I'm going to compare traffic and revenue a little bit, and then we're going to look at some categories. So first thing is what I've showed you so far was across the last 12 months, there hasn't been, when you split it up by month, there hasn't been any positive traffic for a whole month in traffic. But this is split out by week. Okay, so that's that same data set that you see there. It's just split out by week this time. And it's very few times that we've actually had positive growth, and that's 15 months view that you're looking at there. So only 3 times has it gone into positive territory. There was one flat as well. And then look at where January 2024 starts. So that really huge decline that we saw back end of December and into January, where we just had a really low base to start the year from, is quite perceptible really with the traffic as well. You can see that gigantic decline, and it's kind of tried to build back a little bit. So we've not quite got there, and then Mother's Day has sort of screwed around a little bit with the data a bit. So we need to wait for that to settle down. Wouldn't it be great if the same thing happened with these retail events every year? But it's not the case, my friend. Wouldn't it also be great if we got rid of a leap year? We used our big brains, our big scientific brains, and said, instead of just adding on a day every 4 years, could we not do something else? But apparently that's complicated. This is week on week traffic. And you remember that when we looked at revenue a bit earlier, it really looks very similar to that. So the gold line is 2024. So it's just, doing pretty good, I think, so far. It's just we've started from such a weak base. That's why we haven't really kicked on very well. And the similar kind of things happened on the right-hand side, where we had that week following Mother's Day. It got just a decent sort of week, really. So that adjustment, the strange adjustment that's going on, got to let it settle down for a couple of weeks. But it just feels like it was an all right week last week, despite the fact it was really quite heavy raining. So that's how that looks. And now let's look at traffic and revenue combined, right? So this is looking at the week commencing the 17th of March, so the latest week of data that we had. And we're looking at here at, for each of these categories, traffic and revenue, right? So traffic is blue and revenue is the orangey, sort of one peach, one other. So what you would think might make sense is if they sort of align, really. So if the traffic is down, then the revenue is down as well. If it's up, then it's up, right? And most of the time, actually, it does sort of follow a similar pattern. So most of those categories do that. And it's just a couple where the bars are shooting in the wrong direction away from each other, but most of them do actually seem to make sense. Now, we can show you this over a slightly longer period. What this you're looking at here is a year-to-date figure for the revenue in these categories. So what that means is for the, how many weeks have we had so far this year? 11, I'm going to say, possibly 11 weeks. What is that 11 weeks compared to the same 11 weeks last year? What is the year-on-year increase or decrease based on that? And that gives us our year-to-date figure. So January through to nearly back end of March. And this is how it's looking, really. So fragrance has been by far the star performer this year. Just had a few weeks where it was up 50, 60%, amazing growth. Lead up to Mother's Day, and health and beauty is kind of the leader there. There's a lot of it subcategories in there as well, so it's just doing really well. So that's how it looks from the revenue perspective. What we can do is compare it against traffic, right, to see if these are kind of playing ball. So this is the ones where we have the traffic as well. And most of the time, again, when you look at it over a slightly long period, it does kind of make sense. So GIFs on the far left-hand side there, the revenue's down quite strongly, the traffic's down quite strongly as well. Those two things correlate very well. Most of the time they do, few exceptions there. Health and beauty, the revenue's doing much better than the traffic. So the conversion seems to be holding up a little bit better than maybe it is in some other categories. Sport and outdoors has got much higher sort of traffic than it has revenue, but nonetheless, they're both pushing in the same direction. And furniture really is the one that's really flying there. So really big declines in traffic, but actually the revenue is up. And I think that's just because furniture is really expensive with inflation. So let's have a look at some categories then and show you how these lines are sort of panning out. So this is all traffic that you see in here, and it goes back over 15 months. So to the start of January last year, what does that line look like? And traffic had, if this was a revenue line, clothing retailers would be very happy. But traffic was really good actually in 2023, and but it didn't translate to revenue growth because the conversion fell away a bit more sharply in clothing than it did in the other categories. So that feels a bit unfair, doesn't it? And then look at what's happened in 2024, though. It's just sort of, it looks a bit worse, doesn't it? So not doing that great for clothing, really. But, you know, here's hoping it gets a bit better. But then it is going to be against some big growth across this year. So probably it's not, is it? And then electrical is our next one. And you could basically split this graph in half, couldn't you? Where it was, you know, not doing well necessarily, but there's quite a few weeks in the first half of it where it's 0% or near 0%, and then sometimes into positive. Then there's been quite a big collapse basically as we got towards the peak period, and it hasn't really recovered very well. So electrical, yeah, not doing well at all, I think, electrical. Speaking of which, we can look at GIFs next, and that one always makes for not very nice reading, I'm afraid, at the moment. Has had the odd bit of positive growth here and there, but particularly if you look at sort of March time, that's just last year. It was Mother's Day moved again. It's moved forward 2 years in a row. It's moved forward a week. So there's little adjustments like that you have to look at. But look at 2024 so far. I mean, it's been down 20 to 30%. For quite a few of those, and that's against sort of negative growth from last year as well. So really big decline there for gifts. And then health and beauty, which is just kind of the reverse of this stuff. And you know, a lot of the time it's got positive growth in traffic. So really just doing really well. Everything about health and beauty really is kind of good compared to a lot of the other categories that we see. Feels like a blip, that decline they've seen there. Probably once the Mother's Day adjustment has gone, probably it'll just go to zero or positive again. And then home and garden, and that looks very similar to the revenue line that you see for home and garden, really, where it really did experience a very big decline at the back end of last year, and then it's just been kind of trying to build back from it. Look on the left hand side, if you look at sort of March 2023 and what happens then, so positive growth in traffic for, you know, the next sort of 6 months or so. So that's going to be quite hard to grow against, and we've got Easter coming, so it doesn't scream that Easter is going to see big growth in traffic or revenue. But you know, let's see what happens with that. And remember, if you wanted to come and talk about that, we are having a lunch to review Easter, and that was in the chat. Now, I know we've used the chat extensively today to promote things, but next week, if we're going to put the thing in the chat in a minute, so if you wanted to come to this one, next Thursday, 2 to 3 o'clock, and it will be a review of March and Q1 generally. So we'll put all sorts of little data things there to show you how it's gone so far this year. I think you get the general idea, don't you? But it's nice to see some of that stuff quantified, isn't it? So I hope you can join us for that. And thanks for being here today. Thanks a lot.